The following presentation is brought to you live from Dallas, Texas, for the International Association of Square Dance Callers 26th Annual Convention. This is tape 13. Tax returns, a spreadsheet approach.
Go. All right, this is going to be keeping track of personal federal income taxes month to month. The name of the session is keeping track of personal income taxes month to month, and that's basically the goal that I set out to attain. Back in about '93, I came up with this method, scheme, whatever you want to call it. It requires a couple of things. Number one, you have a computer. Number two, and the kind of computer you have doesn't matter. Janice asked a minute ago, the spreadsheet that you have doesn't matter. I use Lotus because I've been using Lotus since 1982, and I'm comfortable with it. Excel will work. And I understand there's some other spreadsheet type products that are out there that are also are also adequate for the purpose. As long as you've got a product, a spreadsheet type of product that will move numbers around for you and summarize numbers one way or the other, then you're okay. My name and address and phone number, email address are all in the front of the handout there. There's a handout up here if you'd want to come get one. And feel free to, if you have a question, send it along on email or call me or what have you. One thing I do need to point out to you, and that all of the things I'm about to impart, all the information I'm about to impart, all the information I have in the handout here, is information that you need to take and to take to your personal tax advisor that you have now for your personal situation. There's no one way that's the best way to do what I do. It works for me. Let me say that. I've been using it since '93. So what is that? 6 years, 5 years, 6 years. And what it's done for me is it's given me the visibility of where I am as far as my federal tax situation is concerned. Federal tax only, month to month. I can see that I either need to increase my withholdings or increase my estimated income or estimated payments or something in order to keep myself from having to pay a huge payment at the end of the year. And if I do have to pay that huge payment, keep me from having to pay a penalty for underpayment of taxes and that sort of thing. So starting with that, if you just flip to the first page, the overview, basically I said the things you need to know, and these are things you can all get from your personal tax advisor, is your tax bracket. You hear a lot about the 15% bracket, the 28% bracket. Your tax bracket means the tax you pay on your income. You take your taxable income and you take the tax generated, and you divide the two together and you come up with, that's my effective tax rate. And for most people it's 15-something% or thereabouts. The current mileage rate for the current year. Remember, this is a current year thing. This is not a filing year kind of thing. This is the current year. You would implement this scheme for the year 1999. Admittedly, you're all in the process, or maybe you've already done it. You've already filed for 1998. This is a scheme that will work for the current filing year. Your standard deduction, which means, are you married? Are you single? are you filing jointly? Are you filing separately? That sort of thing. You need to know that. And you need to know your dependent deduction. In other words, how many kids have you got, if you have them, and how many dependents are you going to take on your tax return. So you need to know those things. The second thing is, as I said before, the tools required. You need to have a computer. And one of the things that I do, and then this works for me and works very well, is I have a separate checking account and a separate little savings account attached to that checking account that I use for Square Dance calling income only. All the money from the income I make goes into that checking account, and all the expenses I pay from that checking account. If nothing else, it keeps things clean. You don't have to say, hey, where's that deduction that I had? I know I paid this bill for these $38 worth of records, and I don't see it here anywhere. But if you do everything in and out of one checking account, then you don't have to fish around for where's that expense. It's right there. It'll be in that checking account. Other things that'll make it easier for you is a credit card that you use for Square Dance calling expense and nothing else. That way you have an instant record for record-keeping purposes of what you've spent your money on. Where did the money go? You have a record that will fly in the face of the IRS if they ask you for a copy of your expenses. If they say, show me your receipts for all your records, you just pull out all of the expense reports for that year, and you're ready to go. You say, here they all are. Here's that I claimed $250 for records that I bought. Here's $250 in expense receipts that I have. Other things that make it easier, not necessary, but other things that make it easier if you want to do this, and this you could possibly get down the road. I prefer, you may be using another product, but I've checked out other products. I prefer, for my purposes, QuickBooks 99. I am a CPA, so I understand it a little bit more, and it gives me a bit more flexibility for the things that I want to do. I understand that I looked at Quicken, and it was not as extensive as what I felt I needed. But there is a product called Quicken, which you can also use, and what that does is it gives you a place to put checks you write, income you earn as they come along. That's just another way to do it if you want to do it that way. And then TurboTax. I use TurboTax. I've been using TurboTax for several years. It's a pretty good tax preparation worksheet, or tax preparation product. I think TurboTax goes for state and federal together, $35 a year, which is a deductible expense, and or at least part of it ought to be a deductible expense. You can allocate however you want to do it, and then Quicken or QuickBooks is $129. I think I paid $129 for it a couple of months ago. So we're not talking jillions of dollars. So that's an overview of the things you need to know and the tools that are required. Getting into the spreadsheets themselves, the spreadsheet itself, because what I do, and I recommend this to people, to you folks, is I try to put the whole spreadsheet. All of these are areas. All of these items that are on the board here are areas within a single spreadsheet. I start off with what happens on a day-to-day basis inside that spreadsheet, and I start off with the month of January through the month of December, and I total those two year-to-date. And that gives me total year-to-date income and total year-to-date mileage, because mileage is a very important one. By the way, notice on the overview area, things you need to know, the mileage deduction for the first 3 months of the year, what is the number? Is 32.5. The mileage deduction for the rest of the year is 31 cents. The IRS did that based on some survey they had taken that said this is what it really costs to get a car, keep a car on the road. Costs more in the first 3 months of this year than for the last 9 months. Nonetheless, inside, and this is all in a single file, all in a single spreadsheet file. The date. For instance, if I called a dance today and somebody paid me $50 for it, I would put in March 28th, and I would put in the number of miles I drove to get to that dance, from my house to that dance. And then I have another little column over here that just multiplies that number by 0.31 or 0.325, depending on what month of the year I'm in, and it will total down to the total mileage deduction for the month, total income for the month. And using the spreadsheet, you would sum these all the way across to this box here, this area within the spreadsheet, and that gives you so far year-to-date. That's YTD, year-to-date income, and year-to-date mileage deduction. So all you have to do is put in what you made today, what you drove today, as it occurs. And you can't let this go for months and months and months, because it becomes a very cumbersome project to catch up on things over a period of time. But if you do it as you make deposits into your checking account that you've established for your Square Dance Calling income, if you do it as you make those deposits, you just put the income and information and the mileage information right here, and it'll sum it across. This information will come up with a spreadsheet formula, will come up to the Schedule C area. Schedule C is what the IRS calls income from a business or profession. I think that's what they call the form. And I think there's a copy of the Schedule C way in the back of the, I did it. I put copies of all of these forms that we're talking about in the back. Yeah, Schedule C, profit or loss from business is the name of the form. Anyhow, this information, your total year-to-date income, your total year-to-date mileage deduction, will come up here to the Schedule C area inside the spreadsheet. Again, all of this is in one file in Lotus or Excel or whatever the product is you're using. And now you have total year-to-date income from calling and as the expenses occur, and I don't have room on the board to do this, but you can also there's a couple of different ways to do this. You can just expand this area here and put expenses here, sum them across, and bring them up here so that you've got income and expense, total income and expense all in one place. Or you can just put expenses here month by month. I do it this way, where the only thing I put down here is income and mileage. And I bring it up here. I don't have room on the board to put out 12 of these, but there's 12 of these, and this comes up into the totals area, one for each month, and I put the expenses as they have occurred as they have been incurred in here month by month and total them. At the end of this total, there's the number that is the bottom line year to date, as of, for instance, today, the bottom line year to date income or expense for through today, from calling, from square dance calling or round dance queuing or both or whatever it is you do. And oh, by the way, this will work for any business that you're in. It doesn't just work for square dance calling. If you sell Mary Kay products or widgets, it'll work for any business that you're in, because that's going to go to a Schedule C type of thing, assuming you're not incorporated, and then this is where this system would work for any business you want to be in. The Schedule C, let me go on to this. Now you've got these other areas, assuming other areas or other types of income you have. If you are calling square dances and you're also working for a living, you have a job, such as I do, I put my wages in here as they occur. I put my withholdings in here as they occur. So for the month of January, I know I made $1,000 gross income, and I had $200 federal taxes withheld. I'll put that in here. So I'm just keeping track of it as it goes. Or, this is a suggestion I made in there, let's just say that we'll do that for now. I keep track of it as it goes month by month. And you don't need a whole lot of lines in here to do that. You don't need 12 boxes. You can put it in here. You get paid once a week or twice a month or something. You can keep a track of that in here. Interest and dividends, if you have, you'll get a bank statement at the end of each month. If you have a money market account, a separate money market account. If your square dance calling income bank account is an interest-bearing account. And here's where you have to depart a little bit from square dance calling. All other interest and dividends as they occur have to go here. Because what you're trying to do is you're trying to construct a tax return so far this year. So as you earn interest based on what comes from your bank statements, you put the interest numbers here, you put the dividend numbers here, whatever they may be. It gets a little trickier in this area called itemized deductions. This is another area within the spreadsheet. And if you look at Schedule, I guess flip the page back over from Schedule C, is the page called itemized deductions. That page, if you have itemized deductions, I personally don't anymore. I don't have kids that are in orthodontics. I own a house, but I don't have any payments on it, so I don't have interest in property tax. That's all we have is property tax. We don't have enough itemized deductions to be bothered with it. Our standard deduction is bigger than our itemized deduction, so we take the standard deduction every year. I don't have anything in this area. Now, if you're still raising kids and you've got a house and you've got, 3.5 kids, 2.5 dogs, and 1.5 cats, or whatever the real number is nowadays, and you have theft and casualty losses, you have gifts to charity, you have job-related expenses and miscellaneous itemized deductions of one kind or another, you'd have to come up with some means of estimating those numbers. And that's about, I guess, the trickier part of this whole thing, is you need to be able, if you do have a tax return, and you can look at your prior year tax returns and you'll know if you have itemized deductions or not. You can read that from and if you don't, you can ask the fellow who did your tax return for you, did I itemize or did I take the standard deduction? If he says, oh, you don't have enough To itemize, you just took the standard deduction, then you don't even worry about this area. If your situation is such that you have itemized deductions, then what you have to be able to do is estimate what's going to go on in here, either for the whole year or on a month-to-month basis. And that's about the trickiest, I guess, most exotic part of this whole thing. This area, the area of the income and mileage, you just dump numbers in as they occur. Deposits, we'll say, as they occur, mileage as you drive. Wages and withholding, you just dump it in, just record it here as the wages are earned and as the withholdings are held out of your paychecks. Interest and dividends, you just put that number in as the interest and dividends are earned based on your bank statements or statements that you receive from the Dean Witter or Merrill Lynch or whoever you've got your money market accounts with. This, again, I explain here, what you do is you record the income and expenses on a month-to-month basis. Your income comes from this area. Your expenses, you would set up an expenses area in here, records, insurance, travel, other than the mileage travel, I mean airplanes and that sort of thing. You'd just set up categories in here, sum them for the whole year. And that would make this area much bigger than I'm able to represent on the board, but it would make it a fairly large area. Well, let me stop right there, because I just talked for longer than I wanted to. Any questions about anything so far? Have I lost everybody? Or do I at least have some of you still with me? Do I have most of you with me? All right, good. Okay. Once you've got this all set up, all of these numbers, again with spreadsheet formulas, will come over here to the 1040 page 1 and the 1040 page 2. This is the front page of the tax return, and this is the back page of the tax return. Now, if you flip back over from the Schedule A and B one page, you'll have a page for notes. Number one, I forgot to tell you about that earlier. And number two, you'll have the front page of the 1040. Now, for the purposes of this tax return, you can ignore the top of the 1040, the name, address, city, state, zip code, filing status, and dependents, and so forth. And you start with line number 7. And that's this line right here. This is wages. All of the wage information from here comes over here to the wages number. The interest number comes from here over to here, to the interest line. Okay? To the dividends number from here would come over to this one. And again, with spreadsheet formulas, you'd bring these numbers over to this front page. Your square dance calling income and expense, or net income, you got $1,000 came in, you spent $500, $500 is your net income. That information would be detailed here and brought over here in summary form, and you'd have that $500 appear in this line calling, which is actually line 12, business income. Okay? The other areas that you may or may not need, and I didn't represent them up here because they don't apply to everybody. If you have rental income from whatever source that may be, like if you own a rental building, if you own a building an apartment complex or a duplex or triplex or something that you rent out, you would have an area in the spreadsheet, a separate area, small area over here called, did I put it on here already? No, I didn't. Rental income and expense. In this area, you would summarize income and expense month to month as it occurs, just as you've done in this area with the square dance calling income. And then once you had your net income from here, you would bring that over to this line to the 1040, which is line something. Line 17, I think it is. Yeah, line 17 for rental income. If you have retirement income is kind of like wages, because sometimes you have withholdings from it, sometimes you don't have withholdings from it. You'd have to have a separate area somewhere in the spreadsheet to summarize the retirement income and its withholdings. I have a retirement income from which withholdings, from which the Air Force holds back some money from me each time. It's a once-a-year payment. And they hold back a certain amount of money, so I just put that in a little area. I know what it's going to be. I just plunk it in there and just record it in this one area and let it sit there. I know what the number is every year, and I know what the the withholdings are every year. So I just put it in there and I bring it over here to this retirement income line. So now what I've done is I've detailed income and mileage for the entire year. I've detailed my calling income and expense for the entire year. I've detailed my interest and dividends as they occur. This is as they occur. This is as they occur. Rental income and expense as they occur. Wages and withholding as they occur. Itemized deductions. That's going to be a tough one because you know you're going to have X number of dollars of medical, or you're estimating X number of dollars of itemized deductions. You can just divide it by 12, I suppose, and put 12 months in here so you could bring it over to the appropriate line. If you make an IRA contribution, now what you've done, of course, you're going to add all this together. Down in here, you're going to have a sum. You're going to have some kind of a sum over here. Then you get into lines 23 through 33. And there's where another area where you have to talk to your personal tax advisor, or simply go back and read your returns for what you've done in the past. The only thing, again, this is the way I do it, the only thing I've got in here is in that area down there is an IRA contribution. I make an IRA contribution every year. I know it's going to be the $2,000, so I put the $2,000 in there. $4,000. Two for me, two for my wife. And we put that in there. We just have $4,000 sitting in here. Now we have adjusted gross income, which is an IRS term just to kind of put away in the back of your head. Adjusted gross income, I represented this as two sides but it doesn't have to be that way. This can all be one area of the spreadsheet. I just move it up to this area. Starting with adjusted gross income, you're going to take out the personal deductions or personal exemptions. How many people do you have? Your wife, your wife, 2 kids, whatever it is. And then and of course this is the number I talked about originally when I said the number for your personal exemption for that tax year, not for the filing year that you're talking about. We're in filing year, or the IRS's terminology now is that we're in filing year 98. We're in tax year 99. So what you want to be sure that you get from your tax advisor is information for the current tax year. Sometimes he may think you want, or she may think you want the information for the filing year, but it changes from year to year. So be sure you get the right number from that person. And then that standard deduction would go in here, or your estimated number from itemized deductions would come with a spreadsheet formula up to this area. One of the two. Can't take them both. One of the two, right? After all is said and done, you've added down to here, you subtract that, you get adjusted gross income, take away the personal exemptions, take away either the standard deduction or the itemized deduction, and now you have the dreaded taxable income. All we've done so far is add a bunch of numbers together and then subtract several numbers from it. Taxable income results. Now comes the portion of, as I said in the beginning of the session, the thing you need to know from your tax advisor, your tax bracket, your effective tax rate, or your projected effective tax rate for that year. In most cases, it's going to be somewhere around, depending on your own situation. In my situation, for the last 5 or 6 years, it's been hovering in the 15 to 16% area. I know that doesn't maybe necessarily correspond with what you hear in the news or what you might be used to when you hear about tax brackets, but tax brackets and effective tax rates are different stories. The effective tax rate has to do with how much you pay. It has nothing to do with a tax bracket or a marginal tax rate or any of the other things the economists talk about. It's how much you pay based on your taxable situation. That number, whatever it is, goes in here as a formula, and in my case it's 15%. Let's just say I would then take this number times, that's an asterisk, by the way, and that's Lotus's version, and I think Excel uses the same thing, 0.15. And that's my tax. Now I'm at the end of March of 1999. I've recorded all of these items that have to be recorded through today's date. I know if I filed a tax return today, if I incurred no other income or expense, I didn't earn any more wages, I didn't earn any more interest or dividends, I had no more rental income or expense, I had no more itemized deductions, my tax is that number right there. And to me, that's the beauty of this situation. I don't have to wait till the end of the year to file a tax return to see how much tax I have to pay. Using this system here, you'll know at the end of each month. Once the bank statements are all in and the wages for the month are recorded, you'll know what your tax is going to be, assuming everything's been recorded properly. You'll know what your tax is going to be right now. Therefore, you know what this number, the withholding number, should have been to pay those taxes. In other words, if your tax in here comes out to $1,000, and wages were whatever they were, and withholdings are $1,000, you have to pay nothing, and you get no refund. You're even with Uncle Sam, which is not necessarily the best of all worlds, but at least you're even with him. You don't have to write him out a check. If it's bigger, if tax is bigger than your withholdings, of course, you can do a number of things. April 15th comes along of every year. You can make an estimated payment, if you so desire. And then you still got down here tax to pay as a result of this subtraction, because of course withholdings, the bracketed items, if you know this, okay, if you don't, bear with me, the bracketed items are subtractions. So this is a subtraction, that's a subtraction, and that's a subtraction. So is this, personal exemptions, standard deduction, and itemized deduction. These are subtractions from the numbers above them. Until you get to here where you have a multiplication. Now you know your tax. You can subtract from that withholdings, which you've been recording here, and you can subtract from that estimated payments, if any, that you've made so far this year, and you'll have your total tax still to be paid if whatever, however that number falls out. In a nutshell, that's the whole scheme. I don't have, as I said, for my purposes, I don't have any rental income. I don't have itemized deductions. So for my purposes, it's pretty easy. The recording has to be done on a fairly regular basis. You can't let it go. Well, you can, but then you just have to catch up on it, and it's more and more difficult to catch up rather than doing it as you go. If you record it as it happens once a week, just sit down and give yourself a half an hour or something, or an hour somewhere at the computer. You can set this whole thing up, you can check your numbers throughout, and you're in business. Or if you get paid, if you have a job and you get paid twice a month, do it twice a month. Let me see what else I want to talk about here. That was all the spreadsheet information, individual spreadsheets we talked about. If you flip over to page 6 in the handout. No, before we do that, any questions? Yes, hold on. I'm supposed to get this on the tape. Go ahead. Give us your name.
Barbara Burton, Okmulgee, Oklahoma. On your estimates that you've paid, how do you know whether or not you need to pay an estimate every quarter or whatever during the year? I guess what I'm asking, we've always paid our taxes at the end of the year. I've had my own business all this time, and the same on my husband's calling. My husband retired last year. This is our first year to have to file with a retirement, and he also bought out another business. And we've paid no taxes except with that retirement. How do you know whether or not you need, does IRS tell you you have to start paying so much every quarter?
No. You're not going to get a little note from them. By the way, Mrs. Burton, you're retired now, you have to start making estimated payments. No, the burden to do that is on you, the taxpayer. That's one little trick the IRS has. Let me, for the purposes of examples, just take out this rental thing for the time being and take out the itemized deductions area here, because maybe if we need to talk about it, I'll put it back in. But you don't have any wages. Is that what you're saying?
My husband gets a retirement.
He has a retirement income. So, okay, instead of wages, we just say retirement over here. Did I have a retirement area? No, I didn't. This is retirement.
You have it on the 1040 page, but you didn't have it.
Oh. This area is an area separate from this area. This area in the spreadsheet is where you're going to record things as they occur. Month to month, he gets a check. He gets, say, a $500 check. In the month of January, 01, you put $500. and he has $100 withheld, so you keep track of that $100 withheld. That goes on the entire year. So at the end of the year, you've got a sum down here that says $6,000, and down here you've got a sum that says $1,200. Okay? For your purposes, this $6,000 you'd bring with the spreadsheet formula up here to where it says retirement. For your purposes, again, this $1,200 you'd bring up to this area where it says withholdings. Now, all the other information you've been putting in, whatever the other information may have been, and you've come to a tax. Let's say this tax is $1,500. $1,500 is your tax. Your withholdings are $1,200. Somewhere along the line, you should have made a $300 estimated payment. And with that $300 estimated payment, what's crackling? Okay, that $300 estimated payment hopefully would have fallen out of the computations that were done as they occurred through the year. And you'd have said, whoops, hey, my withholdings aren't taking care of my taxes, I got to make an estimated payment. Your tax advisor now can provide you with the form necessary to make that estimated payment. Does that answer your question?
Yeah, that answers it.
Okay.
Itemized deductions too and all.
Oh, yeah, well then you...
Eventually I may not even have to pay that $300.
Well, that's true. Because, yeah, again, I'm assuming that neither of these numbers, your standard deduction, based on what you told me, your standard deduction, your itemized deduction, brought this down so you've got a positive taxable income. So, or some taxable income that's going to be more than this withholdings number.
My main concern is that we were waiting. I'm sorry. My main concern was, and we were waiting for our taxes to be figured this year, was whether or not we were going to have to start paying quarterly, and I didn't know if that was something I had to do on my own or if we would be notified that we were to do that.
It is on the burden is on to do that. The burden is on the taxpayer. Talk to your tax advisor and get him to set you up, or he or she to set you up with the forms necessary to make the estimates. Yeah. Okay. Another question. Give us your name. Where you're from.
I refuse to give my name to the IRS. Sid Acker from Dallas. You said you're a CPA, is that correct? It's my understanding, as long as your taxes aren't more than they were last year, you don't have to make quarterly payments. So you can get out of having to make the quarterly payments, and even though the burden of proof is on you, then you have to figure out, is the IRS going to come after you or not come after you?
You're absolutely right. There are, what does the IRS call them? Mitigating circumstances. Yeah, there are mitigating circumstances. There's probably a half a dozen different rules that apply to whether or not you have to make estimated payments or don't have to make estimated payments. And that's why I said at the very beginning of this whole thing that anything I say needs to be taken home with you and applied under the advice of your personal tax advisor, under the advice of him or her, to your personal tax situation as to whether or not this sort of thing applies. Having to make the estimated payments even applies. Because as was it Sid? As Sid said, yes, there are circumstances in which, even though you owe tax, you don't have to make the estimated payment. And your situation, Barbara, may be just that. Because if your income is lower than last year, your taxes are lower than last year, maybe you don't have to make an estimated payment. You just wait till the end of the year, pay the $200 or whatever it is, and you're happy. Yes, you're absolutely right. Yeah, okay, you want to ask another question, or?
The question I have is, can you make an IRA payment and a Roth payment in the same year on both if you have earned income? Do you know that answer?
I don't know the answer to that question. Although I say I am a CPA and I am a CPA, I don't have a practice where I sit down and do tax returns for people on a regular basis. I work for a cattle company. Or more accurately, a family conglomerate. It's all agricultural interests all over the country. And most of what I do is internal financial reporting and cost accounting for that firm. I, of course, do work with CPAs. I have to keep up at least some general knowledge of taxation for my own purpose. The whole business of the Roth IRA is very, very new. I think this year is like the first year that is even available. Again, please take that question to your personal tax advisor, because that's a very personal situation, whether or not you want to convert from a standard IRA to a Roth IRA or continue making standard IRA deductions. That's a very personal situation, and it has to be looked at individual by individual. I don't think you should even take groups of individuals and say this group ought to do it this way and that group ought to do it the other way. It's a very personal situation. It relates to your personal situation and yours alone. Okay? Another one? Okay, sure.
The other question I have is, from time to time we're requested to do complimentary calling for organizations, and is that tax deductible? Is the time or what you would charge, would that be tax deductible? Do you know the answer to that question?
The subject you brought up is the subject of forgiven income, or income that you would have earned had you done something, but you said, "Oh, I don't want the money. You just keep the money." Okay, that's, in other words, you normally charge $100 for this, but it's a charitable thing, a Boy Scout, Girl Scout group, church group, whatever. You normally charge $100 to do it. You didn't charge them anything. The answer to that question is no, because you are a cash basis taxpayer. If you are in a corporation and you are an accrual basis taxpayer, which is a whole different set of rules, then you could say, I have an accrued charitable deduction. It's kind of iffy as to whether or not that sort of thing is possible. Now, what you can take is the mileage. You can take the expense in this area. You can put mileage. If you drove 100 miles round trip to do this demonstration or one night stand or whatever it was, you could put the mileage in there, 100 you've got over here, and your income for that area is 0. Now you've captured the allowable expense, and if you had a meal on the way or that sort of thing, you'd capture that expense in this area in your month-to-month accounting, but you would not be able to say, I would have made $100, so I'm going to take a $100 deduction. No, you can't do that. No, that's not allowed. Yeah, here, another question.
In our square dancing, do you have to spend an overnight in order to claim a meal?
No. If you, and I do this a lot, I drive from my home in Tucson to Mesa and back, or to Phoenix area and back, to, where else do I go? I go the Nogales area and back, Benson area and back. I don't go and stay overnight, but I do eat a meal, and I do incur mileage on the way. No, you don't have to stay overnight. There are some rules about, and I've got a handout in here, there are some rules about something called, and I don't know a lot about this because I don't use it much. The very last page of the handout is an excerpt from the IRS's bulletin on travel expenses, and it has to do with something called the standard meal allowance. So rather than clutter up the conversation, read this thing, because it's possible it may apply to you. What it does is say, I was away from home for 2 days, and instead of itemizing and keeping track of individual meals, you can say, the per diem rate, the government, and that's another thing you need to know, the government per diem rate in this area is $36, so I'm going to take $36 for each day as a deduction, flat deduction, whatever you spend, you take it as a deduction, such as CALLERLAB here, over and above your ticket to get here. With the old standard meal. Just read this thing, and it's not all that exotic. It's fairly straightforward, and it has to do with the standard meal allowance, which kind of goes along with your question on overnight stays and meals. But if you just go from point A to point B, such as I do, I go to Mesa, I have to be there, set up, ready to go at 7 o'clock for the round dance person to start their dance. I have to leave my house no later than 5 to get there by 7. I usually leave at 3:30 or 4 o'clock. That gives me time to stop in Mesa, have a meal, and then get to the dance and be set up on time for the round dance person. I don't start calling until it's 7:45. But my obligation is to be there at 7 o'clock for the round dance person to set up, so I have to stop and have a meal. That meal is a deductible expense. I didn't stay overnight, but the meal is a deductible expense, and the mileage. Okay? Any other questions on what we covered so far from anybody? Questions, comments? I was born and raised in New York City, and I left there well over 30 years ago to join the Air Force and see the world and lots of other things. But I don't know if I still have an accent, but I talk fast. And I don't want to give you the impression that I'm talking fast because I'm trying to bowl you over with this information at 300 miles an hour. We do have another 45 minutes. And I also hopefully am not putting you to sleep. So, if there are no more questions, what I want to do is point out the page 6 of the handout. I'm intentionally skipping over page 5. I will get to that. Intentionally skipping over that, I will get back to it. It's just all page 6 does is now again I'm assuming, and I was kind of gratified this morning because I think this morning Larry Cole asked how many people have web access. A lot of hands went up. How many people have email? A lot of hands went up. And I thought, wow, this is great. You know, it's not going to be. We've got all these people with computers are going to come to my session in the afternoon, and at least we'll have people who've got web access, because a lot of what I'm talking about here requires web access. The first 1, 2, 3, 4 are just websites. The government, the IRS website is a kind of a good one because all the IRS publications on, you name it, they're there. The publications, the forms, they're there. You can download them, you can print them right on your printer at home. Okay? The government per diem rates, which relates to that last page I talked about for travel expense, there's another website you can pull up and get the government per diem rate. If you're going to spend 3 days in Albuquerque on a calling trip, you can look up and see, well, do I want to take the real expenses, or do I want to, or not the real expense, do I want to take the actual expenses, or do I want to take a per diem type of thing? You can look that up there. Links to state forms. Many states have income tax, many states don't. But if you want, you can go in here to this website and you can have your link to state forms and instructions and so forth. And then just because, I don't know why I put this in the zip code locator, you can find any zip code in the country on there. The IRS's phone number, 1-800-829-1040. And I just kind of summarized a few of the IRS publications. If you go dabbling around in the website, Publication 17 is the basic standard, or the basic federal income tax information for just about everybody. And then there's the other publications on travel, self-employment, business expenses, record keeping, and business record keeping. All of those are available on the IRS website. The last item on the page, it says CD-ROM with all forms and publications. We sent off for this CD-ROM. This is it. It's just what it said. It's a CD-ROM. Every IRS form, every IRS publication, every IRS instruction, federal only, is on this CD. And the kicker that they've thrown in, which is a kind of a cute one, if you don't want to buy TurboTax, and you've done all this, right here you've got your tax return. Right here you've got the information to put on Schedule B, interest and dividends of your tax return. Right here you've got the information to put on Schedule C. If you have retirement income, you've got a place to put that on Schedule E, I think it is. In any case, these forms, you can fill them in on the screen and then print them. You can do your own tax return. You can still buy TurboTax and go through the interview process and so forth. This is $17 I think we paid, $18 I think we paid for this. And the address and phone number that you would use to order it is there on the, it comes from the National Technical Information Service, and that's the address there in Virginia. But the slick part about it is they set it up so that you can fill the forms in on the screen. So somebody finally did something really smart. Yes. Yes, they all are. Mm-hmm. Publications are on there. The IRS forms are on there. Just about, unless you've got a terribly, terribly exotic tax return. Even if you've got a very exotic tax return, all the forms you'll need will be there, because every IRS form is there. Okay? Any questions on any of that? We okay so far? Okay. What I try to do is just provide reference material and food for thought, I suppose, is the idea here. And then, let's see, I've got all of the schedules that we've talked about. C and SC. Oh yeah, I think in the if you flip to page, what page would that be? Well, it's the Schedule SE that says self-employment tax. Some of the exceptions you talked about are listed here. And if you get the CD-ROM, or if you go to the IRS's webpage and download this form and its instructions, some of the exceptions you talked about as to whether or not you have to pay the estimated taxes or not I think they're on there. And then the 1040 ES, which is the estimated tax payment form, that's also in there in the handout. Okay. Last but not least. Any questions so far? Yes. One more time. Here's your microphone. Here we are.
Okay. My question is, do you have the formulas that say, what do you use Excel? I don't know what you use, but do you have the formulas that you would have to set this up? Do you have those available, or those,
Get on the microphone, Marcus. No, they're standard formulas that are used by spreadsheets in general. Let me give you an example. All spreadsheets, whether it's Excel, I shouldn't say all spreadsheets. The spreadsheets I know of are Excel and Lotus. Let me use Lotus as an example. Across the top, Lotus puts A through something. BD or JJ or something, columns across the top. Down the side, rows 1 through 8,192. And therefore, each cell on the spreadsheet has a name. Let's say, for instance, as an example, we're over here in retirement income. We got some numbers here to play with. Let's say that. This cell right here, where our $6,000 of retirement income is, this cell is J20. Okay? So in J20 there's the number 6,000. That number has been summed with a summing formula. And that's, if you have problem with that, with the summing formula, it's a matter of going through the tutorial and understanding the spreadsheet itself. This number is derived from all of my 500s that I put down here. And now you get here, you say sum these, and it gives me this 6,000. And that's in cell J20. Over here, to bring that number up here, retirement, I'm sorry. To bring that number from J20 in that area of the spreadsheet up to here, in this area you put plus J20. And I said spreadsheet formulas, and this is in its simplest form a spreadsheet formula. And all it does is whatever was in cell J20 then also becomes the number that it goes here. That's what I meant by spreadsheet formulas. And you would do the same with all these other areas. Square dance calling income and expense. Again, you would sum the income, sum the expense, subtract the two, and now you're in column, let's say you're in E10. This little block down here is E10. And in that block is your square dance calling net income. Income minus expense, let's say it's $500. In that block, with a formula, plus a bunch of things, minus a bunch of things, comes the number 500. Then, since this is, when I say this is row 10 across here, and this is column E, E10 contains that number. You want that number right here. So what you do, on 1040, page 1, you put plus E10. You would not see this representation on your spreadsheet. You'd see $500 there. You would not see this representation on your spreadsheet. You'd see $6,000 there. Wait a minute, hold it.
No, your representation would be over you'd have a column for that. Then it'd be in the next cell over. Well, you would have retirement. You would have retirement, and then in the next space over, you would have your first entry.
I'll be right with you. You would have the word what was it? E10 calling. This one would probably be this would be D10. It'd just be the next one over. So you'd have a title for this block instead of having just numbers there. You'd have no idea what those numbers were. Yes, you're right. You would have a title. All these titles would just move over here, and then the numbers would come up to the column next to it. And then your sum down here would just add these numbers up. So you're bringing numbers from other places with pluses. And then you're subtracting. Like, I know that I'm going to make a $2,000 IRA deduction this year, and I'm going to make my wife's going to make a $2,000 IRA deduction. I just put $4,000 in there and let it sit there. I don't try to bring it from somewhere. I just put 4,000 and leave it there. The standard deduction, I know it's going to be, what is it, $26.50 for me and $26.50. Is it? Well, I don't forget what the number is, but it's a big number this year, thank God. And it's a number that changes every year. So I just stick that number in here. And that gives me that, I don't try to bring it from anywhere. The same with interest and dividends. You'd have a total interest would be in some column over here. Let's say it's $100. Total dividends would be in some column. Let's say it's $250. And let's just, for argument's sake, say this is F, and this is G, column F, column G, and this is 9. So F9 contains the total interest. You would bring over here, you'd have your interest title in this area, and here you would say plus F9. And the spreadsheet would work for you. You would put in all the detail, and the spreadsheet brings over the $100 and puts it there on the front page of the 1040 for you. Okay? Does that answer your question? Okay, here we go. One more?
Yeah. One more question. On that Schedule C where you've got the calling income and you came up with your figure, you can use a formula that will take the total of the income minus the expense, and it will give you the total at the end. Okay.
Yes, indeed.
Okay.
Yeah. What I do is I just take, I'm going to sum this whole business for the 12 months, January, February, March, April, May, ad nauseum through December, and I'm going to come up with a total income and a total mileage. I'm going to take that total income number, whatever it may be, and just bring it up here. And I'm going to keep track of expenses month by month by month in this area by category, because you have to categorize them in your spreadsheet or in your tax return for the IRS. They want to know how much for travel, how much for mileage, how much for records, whatever. So you categorize them month by month, total them monthly. You brought up your monthly income. You brought up your monthly expense. Income minus expense gives you that number. That number comes over here for the year. Of course, you would have to total in this area. I didn't have enough room on the board, but there ought to be probably 12 of these. Because you've got 12 of these. You've got 12 of these. You have 12 months inside the spreadsheet to keep track of income and expense from Square Dance Calling, and total all of them in a separate little area and bring that total wherever it may be over to here and put it in that area there. So this whole thing right here is a pretty squished down version of but if you understand it, are you with me on that one anyhow? Okay, any other questions so far? This is great, we're doing fine. Okay, the only other thing I want to talk about, and some of you may have been doing this for a long time, I personally have not, because the rules have been pretty strict, and the rules have been pretty restrictive, if you will, about the office in the home deduction. You're shaking your head like you have experience in this area. Okay, she quit doing it. They were doing it, they quit doing it because the rules became so restrictive that there were so very, very few people who really, really could qualify under the IRS's audit scrutiny that everybody just said, I'm not doing this anymore. It's just not worth it. However, for 1999, again I emphasize, it is the tax year 1999 that I'm talking about, the rules have changed. They have relaxed considerably. And what I did is I excerpted this flowchart, is what it is. It's a yes-no kind of a flowchart from the Journal of Accountancy. It was an article in the Journal of Accountancy in February, I think, of this year. And basically what you do is you track your way through this spreadsheet, or through this flowchart, I'm sorry. The spreadsheet's on the brain. Turn the page, Ron. All right. You track your way through the flowchart, and it tells you whether or not you can take the office in the home deduction. Does everybody know what I mean when I say, quote, the office in the home deduction? Anybody? Let me ask you this. Does anybody not know what I'm talking about? Good. Number one, does the taxpayer activity constitute a trade or business? I'm strictly talking about Square Dance Calling now. Yes, that is a trade or a business. So you follow the sign through yes. Is the specific portion of the taxpayer's home used exclusively and on a regular basis as a home office? Well, you can construct an area within your home where you have your computer, you have your tax records, you have your calling, practicing equipment, etc., etc. Basically, what it does is it needs, what you need to do is set up some area that is your office in your home. And if the answer to that second question is yes, you go on down the line. Is the home office used by the taxpayer to conduct trade or business, administrative or management activities? Yes. That's where you keep track of month-to-month expenses and interest, and you do your practicing and you work out routines or whatever you do there. Yes, it is. That's a yes on that one. Number 4, is there another fixed location where the taxpayer conducts trade or business, administrative or business management activities? Nope. You don't do it anywhere else. Your practice equipment is in home, etc., etc. Basically, you get all the way down through this thing. Number 5, are the trade or business activities performed in the home relatively more important than activities? Well, of course, you can't do them anywhere else. So they've got to be more important to do them there than anywhere else. So number 5 is a yes. Number 6 turns out to be a yes. Do you spend more than half of your time in the home or office? Well, probably so. You doing administrative work, not calling dances necessarily, but doing administrative work. You spend all of your time doing administrative work in the home, in that home office. You don't do it anywhere else. Number 7, are you an employee? Nope. You're an independent contractor. You have a contract for all of your dances that you do, so you're a contractor. So the answer to number 7 is no, and then you finally wind up down at the bottom. Yes, you have met the requirements for a home office deduction, and you can take the home office deduction. Ultimately, what this means is a piece of your home, if you choose, and this is an election, this is not something you have to do if you have a home office. It's something that's to your advantage to do in one way, and it's a good news, bad news thing. Let me point it out that way. While you have the home office, you can let's say your home is 2,000, or let's see, make it easy here, 1,000 square feet, and 100 square feet is office space that qualifies under all the rules that we just talked about here. 1/10 of your home now becomes a business asset. 1/10 of your insurance, 1/10 of your property taxes, 1/10 of your utilities, 1/10 of your repairs, maintenance, and so forth, all can be allocated to the office in the home. You now have a deduction on your tax return on the Schedule C that goes in your Schedule C up here from calling income that will reduce your taxable income. That's the good news. The bad news is, when you sell your house, 1/10 of your house is deemed to be a business asset, and it's sold as if you were selling a business asset, depreciated business asset. So let's say you take your 1,000 square foot house and you sell it for $1,000. $100 of that becomes taxable income, whereas normally when you sell a house, none of the income is taxable. So that's the good news and the bad news. Yes, you can take deductions. If you live in a home that you're going to be in, and it's your home for the rest of your life, the one your estate is ultimately going to get and pass on to your kids or whoever, then it's a real good deal. If you don't go overboard with the amount of room inside your house that you want to call an office in the home, then it's probably a pretty good deal. A small area inside a large house, 100 square feet, 10 by 10 area, inside a, say, 2,000 square foot home, that's only 5%. So the house is worth $100,000. 5,000 of that dollars, 5,000 of those dollars then becomes taxable income over in this area when you sell your house. So it's a good news, bad news thing. I think in general, for us in this profession that we're in, it's probably a pretty good news thing. It was extremely restrictive, and in the past, there were people who took the deduction and they had it bounced. The IRS came back, and it was almost an automatic audit flag. Take an office and home deduction, you'll be audited. And I'm not saying you won't be audited now if you take it, but the rules have relaxed considerably, so the option is there now where it wasn't there in the past. Explore that again with your personal tax advisor. Take your personal tax situation to your personal tax advisor, whoever's doing your taxes now. If it's H&R Block, I'm not sure you'd want to take it there. Find somebody who does tax advice. H&R Block and the other tax services, storefront tax services, are just that. They will prepare a return based on what you bring them. They'll defend you based on what you told them. But as far as giving you advice, I'm not sure they're very good at that. I don't know, to tell you the truth. I've never known of an H&R Block that would advise you. Find a CPA, what do they call them in Arizona? A CPA or a personal accountant, PA. Other states, I'm not sure what they're called, but CPA certainly can do it for you. A CPA certainly can do it for you. I would recommend finding a CPA that, possibly a CPA that does other Square Dance Callers tax returns. Because that would be a person then who would not only understand the taxation side, but would also understand our individual problems and concerns. All right? Floor is yours. We got a half an hour. I don't believe this happened in an hour. My goodness. All right. Anybody got any questions? Yeah, question. Here, let me give you the mic. Hold on a minute.
Well, since no one had a question, in regards to your taking the home office deduction, again, you have to assume that the IRS may come into your home, and so you've got to make sure that you set that up. And it doesn't mean you cannot have a couch that makes into a bed in that home office. I mean, some people think that because you've got to have a place to sit and a place to use, so you can theoretically use it for other purposes, but when the IRS walks in, it needs to look like a home office. And so there can't, one of the problems, one of the challenges I have is, I've got a lot of books and a lot of other bookcases and things like that, and of course I've got a lot of other stuff, so if they knock on the door, I've got to tell them, wait a minute, so I can go out and get the rest, but just to make sure everybody's clear on that.
Right. Keep in mind, folks, in general, any deduction you take, you must be able to defend. You must be able to support that deduction. Now, in your case, if you've got a whole wall full of CDs that have nothing to do with Square Dance calling or real estate or whatever business you happen to be in, and we're not talking one business. If you take an office and a home deduction and you're involved in real estate, and you're involved in Square Dance calling, and you're involved in selling Mary Kay products, that office should be allocated to all those areas. But if there's things in that office that have nothing to do with your business, now you have an indefensible position. You can't say to the IRS, this is my office, because then the agent says, what's all these CDs belong to your kids? This is not your office. That whole area, we'll call that not your office. It must be any deduction you decide to take, for whatever reason you decide to take it, you and your personal tax advisor, based on your personal tax situation, be sure that you can defend that deduction and you can support that deduction with facts and figures. And then unless they want to take you to court. But if they took you to court, you'd wind up, instead of having a $200 deduction, the money that they would get back out of you was probably not enough to bother with. They might try to assess you some little penalty or something. You just pay the thing and be done with it. Unless they're talking big bucks, they probably wouldn't wind up taking you to court. I don't know if that's true or not, but in a lot of cases, they'll look at it and say, well, all we're going to get out of this is we're going to change this guy's deduction from $38 to $32. Well, what's that going to do to his tax bottom line? Probably nothing. But in any case, whatever the deduction may be, whether it's the office in the home, whether it's a standard deduction, whether it's an itemized deduction, whether, no matter what it is, particularly deductions for expenses on Square Dance calling, or Mary Kay products, or Amway, what's some other things you can sell and call it, that's that sort of thing that you can be in. Any deduction you want to take, be sure that you have a defensible position. You can support that deduction in the eyes of the IRS, based on their rules, because they make the rules. You have to play ball by their rules. Unfortunately, it's their ball. You have to play by their rules, as the case may be, fortunately or unfortunately. In some cases, they work to our advantage, and in some cases, they work possibly to your disadvantage. I don't know. Yes, Barbara, one more question? Yeah. It's back on the mic.
Thank you. I have an upholstery shop. Okay, I have my own business. Okay, it's in a separate building on the same property. However, I use the office where we we have one computer, one file, everything's filed in that same office. It's an office area where I have a desk that I take care of personal bills, our personal bills that we have to pay every month, as well as that's where I write my receipts and keep track of what I spend in my shop. Can that still be used for that because I have a separate building that I do the work in?
What you'd have to do is you'd have to sit down with your closing statement when you bought the house. However many years ago that was, you have some kind of basis, is what it's called, in that house. You, in your hands, at the time you bought it, you paid X dollars. And that would be on a closing statement. Now let's just say, for example, that it's 10 acres of land. I'm just used easily divisible numbers. It's 10 acres of land, and on one of these 10 acres, you have this little building. And that's all that's on this building. It's a 1 acre building. And that's where your upholstery shop is, all right? You upholster airplanes or something that takes an acre building, as the case may be. But anyhow, you would then say 1/10 of what I pay, subtract the land. Whatever you allocate to land comes out of the whole shooting match. Out of your 100,000, let's make it easy. 150,000 is what you paid. 50,000 you say is land. 100,000 is buildings. 10,000, 1 acre of the 10, is your business asset. You can now depreciate that asset by whatever method you choose, and your office, your separate office from that building can also be taken as an office in the home, because you've set this 1 acre area aside as a business asset that you bought when you bought your house. Yeah, again.
It was an office. I've never done that. All I've done is just take a percentage of the electric and telephone because I don't have running water out there. But those two items I do use.
Okay. In that case, you.
I am using it for everything since we got the computer.
Oh, so you've moved the office that was in the home into the building that's.
I've moved what I was doing in the building into the house where the computer is at.
Okay. You still have I would think you still have. Again, you'd have to talk to your personal tax advisor about how you want to allocate these expenses. But I would think that you still have an office in the home expense, because that's where you do your administrative and managerial type of things for your business, whatever the business may be. You have an upholstery business, you have a square dance calling business, all of the management and administration area is done there. Now, where you may run into a problem is when you get to number, on the flow chart, number 4. Is there another fixed location where the taxpayer conducts substantial trade, business, administrative, or management activities? There's an area where you may not be able to support office in the home expenses for the upholstery business, but you could still conceivably support and defend the idea in the eyes of the IRS that you have office in the home expenses for your square dance calling business. Again, talk to whoever does your tax return. An advisor, please. Get an advisor. People are going to say, well, you're a CPA, so you're going to have to go spend money on CPAs. Take $100 and sit down with a CPA somewhere and say, here's what I want to do, here's what I learned, here's the handout that somebody gave me. Where do I fit? How does my personal tax situation fit into this whole scheme of things here? What can I do that will be to my advantage to avoid taxation? And note the word avoid. Avoidance is legal. Evasion is what's illegal. You can avoid taxes, that's legal. And all of this is avoidance of taxes. It's not schemes and loopholes, it's avoidance of taxes. It's things that are available to people that maybe people don't know about. Yes. Well, let me get you, hold it, I got to get you on the mic here. We're on tape, so I want to make sure I get you on the mic. Here we go. Give us your name and ask us your question.
Jerry Mitchell's the name. The caveat on home office is be sure to keep a long-term record on it. If you ever sell the property, then you've got some other challenges to answer.
Yes. Yeah, that was the thing I mentioned earlier when I said that the office in the home deduction is a good news, bad news kind of thing. It's good news because you get a deduction right now for part of your home. It's bad news because when you sell your home, you have a business asset that you've now sold. And you need to be able to support the fact that over the period of time you had a business asset. How did you depreciate it? Keep good depreciation records. Make sure that your depreciation records are meticulous. Those will be examined. You can bet those will be examined. How much did you depreciate? how much could have you depreciated, that sort of thing. So yes, keep good records, and that's one of the reasons I gave you in the handout. I gave you the several of the publications. The last two, in the eyes of the IRS, the last two are probably the most important: record keeping for individuals and record keeping for businesses. What it does, what these publications do, is detail for you what the IRS will be looking for in the records that you keep to support and defend the deductions that you take and the income that you report. That's what they'll be looking at. Okay? Thanks very much. That's a good point. Yeah. Any other questions, comments? Are we done? Thanks very much for coming. I hope it was somewhat helpful. No matter what you thought, would you please do this for me? There's a yellow critique sheet in your packets that you got from the staff when you signed in. Please tell them something about this. This is the first time I've ever done this, and I've been doing it for myself personally since '93. 2 years ago, I asked George and his staff if they'd like to have this kind of thing. We weren't able to put it together last year because there were so many major issues to go over last year. That there wasn't enough time to get a seminar such as this in. This year there was time to get it in. George called me and asked me if I'd do it. And please make a comment, because this is the first time this has been done. If you liked it, say so. If you didn't like it, say so. I have broad shoulders and thick skin, and if folks would like to see it again, I can change it, rearrange it, update it, what have you. But please make a comment on your critique sheets about this session, and to turn into George and his staff for possible changes for next year, or possibly including or not including it in next year's activities up in Vegas. All right? No other questions? No other comments? Everybody get a handout. I'll make sure you at least get a handout. Yeah, come and get one. I got them right up here. And then pass the word if you want to. I'll put these handouts over at the, Dar, I guess over there somewhere you've got a table for excess handouts. I'll put them over there by the staff area. So pass the word to folks, and they'll be there if they can pick them up, and have a great day. Thanks for coming, folks.